All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Thursday, ladies and gentlemen, 20th of November, 2025. Look, I'm recording this one just a few moments before finally receiving the NFP number for September, of course. But look, we'll dig into all that. I will be covering this one kind of live, although this video is recorded. But while I'm recording this, the numbers are coming out live. So look, before we jump any further into the action, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So yeah, ladies and gentlemen, like I said, the numbers are coming out in a bit. Also, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, let's have a look. In a few seconds, let me just refresh this page here. Let me just get rid of all these alerts here. And like I said, we will be getting the long-awaited job numbers. Look, I talked about these numbers before, and I said, look, maybe they're not going to be the most important, but are we going to get a bit of a market reaction? Let's see. So, as we speak, as I'm talking right now, let's see if these numbers, non-farm payrolls, 119K against the 50K expected. Look, ladies and gentlemen, this is wow. Okay. Of course, this is something that I was talking about and said to you that I think that this number will be a little bit, elevated, and I'll get to one point where it's going to be very interesting. And I'll get to one point here in a bit. Let me just see what else are we going to have here. Non-farm payrolls private. The previous, now this is the interesting bit. There we go. The prior number got adjusted, ladies and gentlemen. Let me just have a look. Let me open up the chart here, the live chart. Okay, let me just save this. So the previous number got adjusted. The previous number. The NFP figure. Let me just double check the non-farm payrolls here. Okay, this is very interesting things happening. This is what came out in August. At the end of August, we had 22K number. And what's interesting, like I said, we got an adjustment. The adjustment is to the downside. So the previous number was at 22K. The forecast was for 50K, and it came out at 119. So in general, everything is fantastic. Everything is fine. But the problem is that this to me is a problem. This is something that I think that they're trying to hide this by by kind of giving us a much better number here. We know that the whole drama, the whole saga with the whole government shutdown, kind of forced the data to, well, actually, first of all, we didn't get any data. Now we're seeing this issue that can we trust the data? And to me, this looks like a little bit crazy. Maybe they wanted to show this number, but they were so afraid. And it kind of actually confirms the idea that I was talking about before, where the numbers maybe were not very good, and then during the whole month of October we saw these big deals getting signed with different big tech giants, where they were all signing these AI deals and actually kind of circulating the money between them. And this is another topic which I'll discuss, of course, but in another show, actually. But this is the thing. For now, yes, great, wonderful. We're seeing a better number, but how to deal with this part? If minus 4K, that's the first time since the pandemic that we're seeing the number in the negative zone here. So as you can see here, back, let me actually just open up. Maybe I'll try to find. I'll try to find the non-farm payrolls here, and just non-farm payrolls. There we go, and another source. So yeah, like I said, the previous number was at 22K. It's really, like I said, really interesting to see that we're seeing that yes, the August number came out at -4. So that was the August figure -4. In June we had a -13 adjustment actually as well, which I cannot see here on this. Let me just double check here very quickly. Let me just see if this is where we are right now. This is the figure that I'm talking about. There we go. The number got updated, the chart got updated, but what I'm seeing in my other source here, the June number was actually on the positive side. Yeah, there we go. The June number was actually above zero. I don't know why I'm having this figure here on a different source in the negative zone. So that's the thing. This like I said, this puts it in a very difficult position, and in a way, on one hand, you're kind of like covering all the corners in a way here. So on one hand, this 119K is not giving the population to worry too much because well, everybody's currently kind of worried about the fact that AI is taking jobs, and everybody's losing jobs. There's a lot of cuts happening, but this 119K is showing up better than the forecast, but that was back in September in a way, right? But the prior number, which is falling into -4K, I think this is the more important one because maybe based on this, the Federal Reserve will go and do a cut. Because look at this, December 10th, right now, we are actually sitting at 27.8% for a no for a cut here, whereas the 72% is for a no cut. This is the big topic today. Let me just refresh this page. I don't know if this has changed, if this has updated now. Let's see what's gonna happen here if we're gonna get this chart here loaded up. Come on, let me just think here. Come on. Oh my God. Honestly, this is the moment where yeah. Okay, so I'll give it a little bit of time, okay? Because if for some reason it doesn't want to update, maybe it's taking time. But this number here right now, the -4, where's that economic calendar? The -4, that kind of gives the Fed and kind of an opportunity to go for that rate cut because yes, the 119 is good, is better than the forecast, or like more than double. But the previous number is kind of still showing that there is weakness in the labor market. The fact that it came out better, higher than the forecast, almost doubled in the forecast, kind of gives this opportunity for the market not to sell off because again we know that right now Nvidia's earnings are the big topic. Everybody's talking about that and telling us how great everything is. However, if we would see a number below 50K and also the -4K, I think that would bring the stock market lower, and I think that this is what would make the market really worried. So yes, again, the numbers are still the same, updated here. So at the moment, we are expecting to see no cut. It's a greater chance to see a no cut. Look, you know what? I'll do it this way. I'll give it a moment here to think. Maybe I'll look at this not maybe. I'll look at this tomorrow in my Markets Talk webinar. But what I'm watching here as well is the next NFP figure. Now, the next NFP figure supposedly should come in the first week of December. However, today I found out that it's going to be canceled unless something changes again. So basically, we're not going to get the October number, and we're going to get the October number sometime else or something. Or I think it's going to be incorporated into November from what I heard. Again, this is an ongoing issue, and I think that this is where we will have to be just very careful. So, long story short, ladies and gentlemen, the NFP, like I said, comes out at 119K, better than the forecast, but it helps the stock market to remain afloat. I want to just quickly check what's happening in the cash index right now. Yes, we're seeing some positivity that's pushing higher. However, I think that this positivity is also driven kind of mainly by uh, by Nvidia's earnings, which kind of came out crazy. I'll do a separate video on that one probably. We'll see how it goes. But yeah, certainly. The thing is that the market is reacting positively to I'm seeing Dow here pushing higher. The US dollar here, look at this, where this one drifting a little bit back down here. Basically, the reason why it's drifting back down, it's not that it's not loving the data or anything, but it's kind of pushing the idea for a rate cut further, just because, like I said, the previous figure is revised to a -4. It's a bad number. Yes, we focus on the actual figure, but when we look at the forecast, it is not good. I mean, we look at the forecast. Yes, it's better than the actual figure is better than the forecast, but when we look at the prior figure, that is where the little bit of disappointment is happening. So, in terms of actually one other metric that I forgot to mention is the unemployment rate, 4.4, ladies and gentlemen. This is also another thing that why probably the market is reacting as it is, because the stock market currently, the cash indices I'm seeing, the futures are rallying because on the hopes that this will change to a higher percentage. I'm talking about the rate cut idea will increase. Also, the DXY here is pushing back down mainly because, again, just because of that rate cut expectation, which could potentially happen. Now, again, the problem which I see and a lot of other people are seeing as well is the fact that we're not going to get the October number. And in a way, on the 10th of December, at the moment, that's the plan for the Federal Reserve interest rate decision. Now, are we going to get another NFP? And this is where it's coming through that we are not going to get. So we're not going to get that. We're not going to get let me just have a look. Let me refresh the Bureau of Labor and Statistics here. Producer price index, that's coming out next week, should be. But December, let's have a look here. Employment situation, that's the 16th here, November, when we're getting. So we're not going to get the figure. We're not going to get the October earlier, so we're going to get the employment number on the 16th apparently. Let me just confirm this. Let me just see if this is what's reflected in the calendar actually as well. 16th, is it Tuesday? USA average there. Housing, right, unemployment rate, there we go. So non-farm payrolls as well. So yes, this is what's showing up in the calendar here. Again, everything can change still, but the 16th is after the Federal Reserve decision. So the question is, like, for everybody, are you going to base your interest rate decision on this? Also, where's that job openings? Okay, so jolts are kind of coming through before that. So okay, maybe that's something that we're gonna see. Consumer expenditure, but that's kind of it. So we're not getting the CPIs even. So there somebody might say actually that the Fed is flying blind. Again, maybe you can agree, maybe you cannot agree. I think that in a way, not blind, but with a little bit misleading data, or maybe not enough data. So although I do understand that we humans, we're the kind of the mortals, right? We know less than they do, and they do know something more than us, right? The general retail clients. But still, if we are given the impression that you are, making your decisions based on the information that you are also providing us, considering that it's a surprise for you as well, those numbers, right? When you get those, then how can we say that you're actually making the correct decisions? And that's where, like I said, the tricky kind of public stunt goes. So on one hand, you're saying that, oh, we're going to do this and we're going to do that, and you normally say that it's based on, let's say, and latest data. But if we are not getting the latest data, we're not seeing the latest data. So how can we kind of trust you in a way? So that means that there's something happening in the background. That's my little issue. That's my problem. I mean, look. Somebody might say, but that has been happening all the time. You know, it's always something happening in the background. Yes, but there was always this public image, you know, creation. Right now, there's no public image. Even we're not getting that. It's like totalitarian, you know, total. Totalitarian regime in a way. It becomes like where, you know, we don't care what the people are, you know, the are thinking. We just do whatever we want to do. So again, it's like I said, it's creating this very bad image, you know, and how to trust the Fed. Let's see, of course, how it's going to go, because again, next year we know that Jerome Powell will go. But certainly, all eyes are going to be now on the December 10th. All eyes are going to be on the most recent data in November. So the next piece of information that it's probably worth mentioning will be the PPIs, and that's happening next week. So we'll see how those play out. Look, so very quickly on what's happening with the very quickly on what's happening in the market right now. So yes, as I said, DXY right now is kind of in this little correction mode. In general, with DXY, if you watched my Market Talk webinars, I said before, and I'll say it again, that I was aiming for the upside. I was aiming for that psychological 100 level, maybe even above that 200-day EMA. I was talking about that one, shown as the white line here on my daily chart, and I was kind of targeting this 100.36 territory. Boom, spectacular. Look at this technical setup, amazing. So we got that. So now what's next? To be honest, I'm not going to rush, because what could happen right now, we could be forming maybe something of a like a triangle pattern here, you know, like, I mean, okay, we can, you know, use this, maybe this upside line here. This could be an option, but overall it could be seen as an ascending triangle pattern, which according to all the TA rules tends to break to the upside. However, we always wait for that clearance. You know, we wait for that clearance of one of the sides, and if we can get this clearance of this 100.36, then great, wonderful, I'll go to the upside. But if we're struggling, maybe the index could bounce around here a little bit in this little territory. So keep your eyes on this. Once we get closer to one of the sides, we're currently closer to the upper side, so we're examining a possible breakout here. If we cannot, if we struggle, then if we suddenly fall back below the 200-day EMA, then this is where I will consider a little bit of a retracement back down towards this upside line, which is, by the way, drawn from the low of the 24th of September. I'm having a look at the VIX drifting lower rapidly. Yes, but that means that we're seeing this the inequity world rallying, and I think that in line with the Nvidia's earnings, I think today will be a positive market day. Let's see. Like I said, I'm recording this before the U.S. opening bell, so let's make it this way. I'm gonna shout out that today the stock market will end up in positive territory. Probably it's not a huge prediction, because probably a lot of people will say that, oh, you know what. Well, actually, that's straightforward. But anyway, so let's have a look at what's happening with gold. Gold is stalling, but to be honest, I think that there could be a chance for this one to actually gold and silver to still move a little bit higher. Just because, like I said, on the positivity, on the fact that maybe we're actually going to get, based on the NFP numbers, we're going to get the awaited rate cut. Again, this is for now that there's still some time, but let's see how this is going to play out. Very quickly on actually on Bitcoin, what's happening with Bitcoin right now. So there's not much reaction, to be honest. It's still the same problem. I think there could be still some more downside here, unless we push back above the 93,000 zone. If we do that, then I'll go for a little bit of a larger correction back up. Bitcoin Cash, still is stuck in between these two trend lines, so kind of coiling up, so waiting for this one to make actually a good move. I hope so, at least. Let's jump into actually the currency world, AUD USD. So you can see here AUD USD rebounding nicely from this upside line, so we're still kind of coiling up as well. In a way, we're stuck here. Waiting for I'm basically waiting for a clearance of one of the sides here. If we start clearing one of the trend lines here, then yes, I'm going to consider the next short-term directional move. My favorite Euro USD. There we go. Beautiful decline, beautiful drop back below this downside line, back below the 1.1540 zone here. And yeah, I mean, in a way, this is kind of paving the way for some lower areas. My next target is the 1.1466 territory right there. Very quick glance at GBP USD. Yes, we're seeing still overall weakness, to be honest, but this is working out nicely. I talked about this in my Markets Talk webinars on Monday and Wednesday, so I'm going to talk about this one as well on Friday tomorrow. So join in. And yeah, USD CAD looking good here. Yes, pushing back up. There's, of course, a little bit of weakness in the Canadian dollar due to weakness in oil. And I think that this pair actually does have potential to push back up here, or not back, but further up here. But we just need to clear this 1.4062 area. USD JPY, beautifully to the upside. Problems for the yen, of course. But I think that until the stock market reverses lower or the BOJ goes for the actual rate hike, which, by the way, it is expected to. We are expected to see that in December, mid-December, after the Federal Reserve interest rate decision. So then maybe we could see Japanese yen kind of reversing back down. But at the moment, it's just a bloodbath here for the Japanese yen against the U.S. dollar. And we are I'm still targeting my 158.88 zone right here, marked by the highest point of this year, current highest point of this year. Let's see if by the end of this year we can actually surpass this. Maybe we could travel higher, surpass this, and then closer to the to the what's the name? But BOJ interest rate decision, we could see a reversal back down. Maybe actually the BOJ will go for that rate hike because we know that Sanai Takaichi kind of said that, hey guys, wait up a little bit because I just came in. I'm promising more spending, so I need a lower rate. So there we go. But yeah, hey, look, we'll see what's going to happen here later on. But for now, yes, I'm targeting the current highest point of this year. And USD CHF, well, this is a bomb. I mean, I love it. I'm loving this pair pushing higher. You can see that the Swiss franc, which is the safe haven, is on the weaker side. That means that there could be an option for indices actually to rally, and basically it's confirming that currently we're still in this risk-on environment. And also with the help of Nvidia, of course, So it seems like this is a one company show. If whenever we can go to this point where one company is kind of determining the whole outcome of the market, I'm sorry. To me, these are red flags, and that means that the more the market gets hooked up just following one company, and if it suddenly happens in that company, one bad earning or bad comment, the stock market couldn't drop easily. Ladies and gentlemen, I'll have to wrap it up here. I think I already stretched this video for too long, but I just wanted to share with you and share with you this information, cover the NFPs finally coming out. That I think this is a big event, despite the data being actually kind of crap. I cannot say otherwise because I think time has to pass until we will trust the data again. Ladies and gentlemen, thank you very much, and I shall see you in my next little video update. Bye for now.